Hola amigos, I am Rodolfo Ramos, Bradesco BBI's Mexico strategist, and welcome to This What's What in Mexico, our bi-weekly video product to give you our latest views. So today, as you can see, we're shooting in the beautiful Rio de Janeiro, meeting with several of Brazilians, top institutional investors, and we will continue to have meetings today, and later we will be heading back to Sao Paulo, where we will be closing our tour here in Brazil. So as we normally do, I'll cover three topics here. The first one will be on the most recent developments and our thoughts on the tariff situation. Second, we're going to be giving you our thoughts on how to position around nearshoring. And third, we're going to give you some views on the recent events around remittances where we've seen some news. But before we get kicked off here with our first point, I'd like to take a quick minute and reinforce here to everybody that's watching us of how important it is for us, this Extel now institutional investor survey, and your support there. We were gracious last year to count with your support, and we were able to reach the podium for the Mexico category, which was a huge achievement for our team, bringing our franchise after 7 years to the next level. And it couldn't have been possible without your support. And we are again asking for you, this time of the year, we're asking you for your support once again. And we would greatly appreciate your support on the Mexico category, on the real estate category, and on the transportation categories. For yours truly, for Juan Ponce, who is part of our strategy team, and also for Bernardo Kaiserman, who has been instrumental to this robust coverage that we have of Mexico. So we would greatly appreciate your support there, and I look forward to a continued partnership with every one of you. So now moving on to our content here, on the tariff situation. We have seen a lot of uncertainty. Everything has happened extremely fast for all the different sectors, including investors, to keep up with the news flow. So just a quick reminder here of where we stand. We're currently being levied, Mexican exports are being levied a 25% tariff on non-US compliant exports. Government officials estimate this number to be around between 10 and 15% of Mexico's total exports to the US. This is because these are more difficult to come into compliance with the USMCA rules, either because of rules of origin or other considerations that make it costly for them to be compliant. So the Minister of Economy, Ebrard, is already having discussions with the private sector on how to bring some of these into compliance, but it's going to be a challenging one to address in the short term. So this is the first one. The second tariff that we're currently seeing is a 25% on steel and aluminum. This didn't raise as many flags because of the materiality in Mexico's exports. However, if we include steel and aluminum byproducts, that number goes up to around 5% of Mexico's exports. So this is also something that the negotiators are addressing with their U.S. counterparts. Now, what is the next milestone for us? Of course, it's April 2nd point where we're going to see reciprocal tariffs being implemented. Mexico's government, starting with President Claudia Sheinbaum, has voiced a very confident view around Mexico coming off of these reciprocal tariffs clean, because Mexico doesn't charge tariffs for U.S. exports. So we agree, but there also could be some nuances to the interpretation that the U.S. has, in which they may include VAT, and Mexico charges a 16% VAT. So as you can see, there's a lot of uncertainty around what could be announced. For us, our recommendation for investors to filter out the noise here is to really focus on the USMCA review. We think that that's where everything is going to coalesce. Having tariffs on certain products makes the USMCA a moot point. So we do believe that that's where we should be focusing on what are the advancements done on the USMCA review front. We do not believe that Mexican negotiators and the US ones as well are going to be sticking to the original timeline of October public consultations and then having a review next year. I think this Trump administration is on counted time. They only have now 4 years, and they're going to make every second important here. So we do believe that we have everybody's best interest to get this review done as soon as possible, and we believe that this is already happening in an informal fashion. And what makes us more constructive on the ultimate outcome, we do believe that the next couple of months will be volatile. We do acknowledge that, but the reason why we are more optimistic on the ultimate outcome is because we have seen Mexican negotiators being completely aligned with the U.S. priorities and views, not only on security, drug, and immigration, but also on trade. Mexico has been known or heard that to be actually proposing implementing tariffs to China to match the tariffs that the U.S. has placed on China on Mexican imports. So we do see a lot of willingness for Mexican from the Mexican side to comply. There's also this possibility of Mexico creating a body that would be in charge of screening investments, to a little bit put a shield, a hurdle on potential Chinese investments into strategic sectors. So this is why we have been more positive on that front. The Mexican peso seems to agree as well. I mean, we breached the 20 peso threshold, which is a very important one. Right now we're around there, but we are as well constructive on the ultimate outcome, and believe that in 5 years' time we're going to be looking back and Mexico probably gained share of the U.S. import market. So this is the first point. The second point on how do we play on the nearshoring side, we recently published an in-depth report of how we believe some of these names have actually been overly punished, and the market is assuming very negative assumptions on some of these names and the prospects for these industrial real estate companies, particularly on the development side. So we have turned more optimistic on that front, and we believe that valuations at these levels already reflect a very adverse outcome, which is why we have increased our exposure there in the sector. I'll leave the report in the description below. If you cannot see it, feel free to DM us, and we'll be happy to share that report with you. So this is the second point that we wanted to discuss. The third and last point, very quickly here on remittances, we saw the U.S. Treasury and FinCEN announcing a measure increasing the disclosure requirements for people in the U.S. Sending now transfers, which also remittances, in excess of $200 to Mexico, that they will now be required to disclose, ID and who is sending these transfers. This only applies to certain counties in Texas and California, but nonetheless, this gives you a very clear signal that the U.S. is very closely following all of the financial linkages with the drug cartels. Of course, the terrorist designation goes to that effect as well, and it only gives the U.S. more teeth to prosecute anyone that might be aiding and abetting cartel organizations. So this ultimately will be, good news for this combat against organized crime, but it can also create a headwind for remittances, especially given the fear of deportation that some of these illegal immigrants might be facing. So this is something that we'll continue to monitor and see how those remittances numbers come in. So this is what we had here for you today. Please don't forget to vote for us in the II survey, and we'll be sure to keep you posted on everything happening on Mexico. Very dynamic time. So in the meantime, take care, amigos, and have a great rest of the week. Ciao, ciao.